Peter, the question we're all asking this week is, how could a bank so successful collapse so fast? Not only that, but could this spark a broader banking meltdown? Let's go back to the root of Silicon Valley Bank's demise, dumping billions into government bonds during the end of near zero interest rates. Now, back to those bonds in a moment, but as far back as 2015, regulators were growing concerned about the bank's rapid growth and reliance on the venture capital world. But SVB kept moving forward, benefiting like few others from growth in the tech industry through the pandemic. Fast forward to last year, when the Fed began raising interest rates at the fastest pace in decades and layoffs starting to take over the tech world. So with interest rates rising, bond prices fall, so the Fed's steep hike in interest rates killed the value of SVB's bond portfolio. Now, reports say the bank's portfolio average was in the range of 1.8% return, far below the 10-year Treasury yield of almost 4%. So customers yanking their deposits in a frantic 48 hours. Now, before Silicon Bank became the second largest bank failure in U.S. history on March 10th, there were a lot of pieces that maybe were a few signs leading into that. So let's go to the natural place to start here. Here's Fed Chair Jerome Powell on the oversight of SVB and the Fed's new investigation into the bank and its collapse.
So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. How did this happen is the question. What went wrong? It's clearly we do need to strengthen supervision and regulation.
So the Fed investigating what went wrong, but a few factors that analysts saw leading into it. But the broader concern, are there similar weaknesses in other banks that have possibly been overlooked? Well, Powell says the American public shouldn't lose any confidence in the system.
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk.
So the tech sector as a whole already suffering from a year of layoffs and pressure from the Fed. Silicon Valley Bank having massive exposure to this one industry, but Treasury Secretary Janet Yellen says the two aren't necessarily connected.
Although the tech sector has been suffering from a downturn and has had some significant layoffs, the problems of the tech sector aren't at the heart of the problems of this bank.
Yellen also adding that the government will not be offering any kind of bailout for the bank, even with President Biden issuing some emergency funding to support the banking system in light of the collapse. Yellen says she's more concerned about depositors in the bank and trying to meet their needs. And yes, other banks were rattled by the news. We alluded to that earlier. First Republic coming close to a failure. That's just the most prominent of a handful. Other major banks pumping in $30 billion trying to save First Republic, but still not being enough. It's likely going to have to sell. But the real tell for the future of the system will be that Fed investigation into SVB and what comes out of it. Bailout, again, off the table, but a lot of room for new regulations or changes to existing ones.